Good afternoon. Thank you very much for joining us. This is a two-part seminar, the first part working in conjunction with the second part. First part will be tactics and strategy. The second will be how to use those tactics and strategy account size-wise, contract-wise, using a prop account and the advantages of a prop account. So I'm not going to answer questions as we go. I will answer questions at the end of the webinar because otherwise we can very, very easily get off track and we will not be able to achieve the goals we're setting out to achieve today. So first and foremost, tactics and strategy. Let's just assume, and I have the last 2 days combined, but just for the visual, let's assume that this is yesterday's range. Our method is based upon acceptance and rejection of the previous day's range and the levels within, above or below. These levels, which are these orange levels, are known as HVAs, high volume areas. Every single one of these edges is a signal call. So you are well aware of where the best possible entries according to our method exist the day before the market even opens. This is something that no one else in the business does. And we're going to get to that why later. You already know where you can get into the market. Now, there are also trending entries and gap fills, depending on where the market opens today versus yesterday's range. So even though you may have all of these levels to trade against, and let's just say we're using the levels in front of us. If you were to open, gap up, let's say you opened up here, or gap down, depending on where you open, you're going to have numerous entries. Now, you are going to have entries with and against the gap fill. So if you open gap up, and this is yesterday's range, every short is a with the trend gap fill entry. Those are our highest percentage winners. I will get to why in a moment. So if you were to open up here and you had a reversal short, that's 1. Reversal short, that's 2. Reversal short, that's 3. If you get below that level, reversal short 4, reversal short 5 separate entry opportunities. You also have 5 counter trend longs at each one of those areas. So right now you have 10 possible opportunities. If you were to open gap down, you have 1 possible long, 2 possible long, and also a corresponding short with each one of those trades. So you would have 4 separate entries. So depending on where you open, you have a multitude of entries. That's not even including our gap fill entry or our trending trade entries, which could give you at very least double that amount of possible entries, either long or short. With that being said, why is the gap fill so powerful? Why do we want to take that trade if we get it? There are 2 areas that are important in yesterday's range. One is the point of control. One, let's just say this is yesterday's close. One is the most heavily traded price. One is the last price traded of the previous session, which is the most relevant. If you open gap up and let's say you're looking for that point of control and the close was at that point of control, futures is a zero-sum game, which means you only need one more aggressive short versus passive long to drive the market short. You only need one more aggressive long versus passive buy to drive the market up. It's a zero-sum game. What do you think is going to happen if you were holding long all the way down here yesterday and the market then opens up and gives you a roughly, let's just say that's 67, a 70-point profit? The vast majority of professional traders are going to close their long positions with a short for a profit. Well, seeing as how it's a zero-sum game, what do you think all the people that were holding short here are going to do? They're going to double down on their shorts because they need to get back to break even or they are going to lose their shirts. Why is the gap fill so important? Because the gap fill play is the only time that buyers and sellers on a majority basis are working together to get back to the same point, the previous day's range. That's why it's so powerful. Conversely, in a long situation, if everybody were holding short, they would wake up with what? A 60-point profit. They would cover with a buy to close their position. Well, what are all the people that were holding long at the point of control going to do? They're going to buy to get back to where they were the previous day, or they're going to lose their shirts. That is why this play is the most powerful play we have. Gaps fill roughly 80 to 90% of the time in the following session, which means if you open gap up or gap down versus yesterday's range today, 80 to 90% of the time, you are going to fill that range. That is why that play is so powerful. The gap fill is in force all day long until the market closes. So there's a possibility for this trade all day long. What are the best times of the day to trade? If you are trading the equities, 9:30 a.m., that's when the gap fill trade will start, to about 11:30 a.m. Eastern Standard Time. At that point, I'm going to give you a $1 million private lesson. Why would this be the best time not to trade? Because people go to lunch. The market generally dies, it goes sideways. There's no participation. Roughly 95% of trading days, you are not going to get a new high or a new low at that time of the day. I would suggest you come back no earlier than 2:30 p.m. Eastern Standard Time when the participation starts to return to the market, and trade until about 10 minutes before the close at 4 p.m. Eastern Standard Time. Otherwise, you are most likely going to sit
Order
there
submitted
between, I would say, 11:30 a.m. and 2:30 and have
Order canceled.
absolutely nothing but sideways movement that is going to drain you of time and energy. Dr. Khan, it's being recorded. I am not going to go back over it again. We can send you the recording when we're done. Those are the best times to trade. Those are the best entries to take. Otherwise, I would not trade. I would stay out of the market. Now, what does this method also supply? It also supplies reversals and inverses at every one of these levels. So if you actually get to these levels, let's just say you're using 2 levels above, 2 levels below the previous day's range, you'll have 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 times 2, 2 trades at each level, 18 possible opportunities the following session, assuming that you get to those levels. The market may just go sideways, open in the middle of the day, and you'll get nothing. Well, what do you know in that case? You know at that point you have absolutely nothing. There is nothing in your best interest to do. Come back tomorrow. Very, very simple. What else am I going to tell you? The first time at one of these levels is always the best time. The second time at most. After that, it is no longer unique. Those levels are common. And if you are going to trade at those levels after you have already traded there more than twice, it is a 1 contract trade. Trade at your own risk. I would suggest you let it go. You want to trade at a unique area. You do not want to trade at a common area. For example, and this is something I would love to show you right now. One of our students, Steve Taylor, earlier took an oil short. That was a level that I called out last night. He has a winner on his hands. You can go back to Steve Taylor again. He took a reversal long in oil at one of the levels that I drew last night. That is a winner. All you have to do is wait and exercise patience and discipline for your opportunity. The money management will keep you in the trade. Now that we've gone over the basics, and I mean the absolute very basics of the method, where to get in, what your targets are, let's use the what? Let's use the prop trading firm's money. Why? Why would you use your own money when someone else will allow you to trade an account size that you would not normally trade and let you keep 90% of the profits? Why would anyone put $100,000 of their own money up in an account which is now completely locked up and you cannot use anywhere else? You can only use it for trading. Why would you ever do that? When someone will allow you to use that same $100,000 of their money for a price of $225 a month after you have qualified. There is no downside. They are taking all of the risk. You get to keep 90%. Let's say if you're using Legends Trading, 90% of your winnings. Let's focus in on a $100,000 account. The most important thing, parameter, out of these 3 parameters is your end of day trailing max loss. I want you to have at least 3 good chances a day at making money and being profitable. So what would that mean? On a $100,000 account, let's just say you were using the S&P 500 only futures account. You could trade 3 contracts using our maximum risk of 5 points per contract. Each trade would then be worth what? $750 max loss. If you take at least 3 trades a day and you lose all 3, that's minus $22.50. That is $750 less than your end of day trailing loss. You're still funded. You have no problems. You're good to go. 3 shots. using $750 of risk just on the S&P only of someone else's money. Why would you not take that opportunity? What's your profit goal? Your profit goal on a $100,000 account would be $6,000. It is not limited by time. It does not matter if you do it in 10 days, 15 days, 30 days, 6 weeks. It's irrelevant. As long as you follow the rules, you are still in play. So once you reach $6,000 in profit, you get to keep 90% of that. 6,000 times 90% equals you get to keep $5,400. How is that not in your best interest to let someone else take the risk? Now, and this is only for the qualifying portion of this deal. You've got to do it over 7 days, which means what? You have to trade at least 7 days before you achieve the $6,000 profit goal. Why? Because anybody can get lucky, guys, put on a contract and let that thing run without any stop management, and lo and behold, you've hit a $6,000 profit. No, they want to see consistency. They want to see that you can do it. Now, let me let you in on a dirty little secret. They want you to fail because they want you to keep having to re-up and renew your account when you blow up. That's why the vast majority of these companies do not want you to have any education, any method, any idea what you're doing. Because they want you to keep paying over and over and over again. You want to know why Legends doesn't care one way or the other? You want to know why they'd rather you make a lot more money than the renewal fee when you blow up? Because if you're consistently making 10, 15, 20,000 a month, that's a whole hell of a lot more than the money that they're making on you when you keep blowing up time after time after time, get frustrated and leave. When you don't have a method that you're trading, you don't have patience, you don't have discipline, and you don't have any money management and profit control. That's why. They are backed by a broker. They are the real thing. They're not some company that's just going to fold up and leave overnight. I cannot speak for any other people. I don't really work with them. But guys, any other prop account that you like, that you want to do business with, same thing. They don't want you having education. They don't want you having money management. They don't want you having risk management. They don't want you having a method that you can do day after day after day. They don't want that. But when you're making money versus constantly blowing up, they're making more of it off of you consistently. That's why it's always in your best interest to use a prop firm's money. And with that, I will take questions. Bruce, this particular firm is Legends. Legends Trading. Are there any questions concerning anything that we went over in this presentation? David, so the 6K needs to be made over. That's when you qualify, David. That's to show them you can do this consistently. After that, doesn't really matter. I would say it's probably in your best interest, but I'm fairly sure you can use just about any platform you want. You're just not going to be able to use our bots on this, but I believe they use NinjaTrader. And it will not be a problem when we switch over to TickBlaze because they will accept TickBlaze as well. Clear, Roman? Is the $2,000 end of day only? It's end of day. So let's say if you're trading and you're down $4,000, but you get back to being minus 1,000, you're good to go, Tiffany. Clear? Not blue water. Nope. Any more questions? Anyone? You've got to ask yourself, what's in my best interest? Is it really in your best interest to lock up $50,000 or $100,000 that's dead money? Or is it better to use someone else's money where they're taking the vast majority of the risk? Last week's recording is being put up. I can't put this one up yet, David, because we're still recording it. Yes, we have discount codes. We have discount codes. Buy now buttons, we have them. You can go through your consultant, you can get the codes. What is the criteria? It's got to be done over 7 days. And you've got to show that you can hit the profit, not necessarily over 7 days. You need to trade 7 separate days. So let's say you hit your $6,000 goal in 14 days and you've traded 6 times, it's not going to work. If it's over 14 days and you've traded 7 times and you've hit $6,000 and you haven't blown up your end of day trailing max, you're now qualified. Clear, Joe? Legends Trading, Bruce. And we can help you through your consultant. We have discount codes. They will be able to help you. It will probably be emailed out and put up on YouTube, Celia, as soon as it's edited. Now, guys, if you're interested in doing this, do not go to Legends directly. Go to us so we can give you discount codes and we can give you links. Because if you don't do that, you are not going to get the discounts. Clear? Go through your consultants. Email them. They can also go over the different accounts with you. Okay? Yes, there's live people you're going to be dealing with, Tiffany. Absolutely. Real people. I'm just a big believer in if somebody wants to take all of the risk and let me keep 90% of the winnings, I'm all for that. Depending on which program you take, it's going to be, if you go from 50 to 150,000, and I would say don't go larger than a $150,000 account. And the reason I tell you guys this is this. Markets are thin. If you try to take a 10 contract trade in the NASDAQ, you're not going to get filled. So there's no sense in having that much margin. Is everybody clear? There's no sense in having an account that big. Try to take a freaking 20 contract trade in the Dow and see what happens. You'll probably get filled up over 10, 15 points. Clear? This is why I tell you, let's see which account fits you best. After that, I will work with you in the room. And we will go over what is the best account size, the best lot size for you to use, the best risk size for you to use. This is changing all the time because you're actively trading. Does everybody understand this? Maybe we'll use a larger tick size. Maybe we'll use a smaller one. Maybe we'll use a larger account size. Maybe we use a smaller account. It all depends. This is why we have a method in place. This is why we make every single one of you accountable. This is why I'm here with you every single day, giving you options so you can make choices. Guys, most of these prop companies do not want you to succeed. They want you to keep paying them every time you blow up. Do you understand this? Now that you know the dirty little secret, what do you think is in your best interest? Learning a method that we all know that works because we're over 75% winners year to date of student trades. Not me doing it, you guys doing it. Or trying to do something without any method, without any money management, hoping and praying. What do you think you're better off doing? Learning a method that works or hoping and praying? Probably learning a method that works. Having me in here every day that you're accountable to for every single trade that you take. What do you think is in your best interest? What do you think is valuable? Using your own money without a verified, provable method that's repeatable every day? Or swinging for the fences on your own, hoping and praying you're going to make money? Doesn't work that way, guys. I'm hiding nothing. I am telling you the truth about everything. If you have interest, contact your consultants. They will send you promo codes. They will show you packages. You don't have to buy software. Each and every one of this can do this on your own manually. All I'm going to tell you is the software makes it a lot easier. Are there any more questions from anyone concerning what we went over in this presentation today? I see Joe is still typing. Absolutely, the bots are used in this. Many of our students use the bots in this. As a matter of fact, I'm fairly positive that they will tell you they would not do this without bots. Because then you're just managing the bot. It's a lot easier than having to manually put your own trades in. Does that make sense, Joe? All right, with that being said, there are no more questions. Thank you very much, everyone. We will get this recording to you as soon as we possibly can. Have a great day.